What's up guys, William Ryan here back with another video, and in this video I'm going to be going over multi-asset macroeconomic analysis. And so today we're going to be covering what I see going forward, going into the next quarter towards the next 6 months or so, next 3 to 6 months. Okay, and so we're just going to start off with the dollar here. And so it is very important, guys, when we're looking at a macroeconomic when we're doing our macroeconomic analysis, what we want to do is bring in other asset classes, right? So here we're going to be looking at oil paired with the dollar. And so we can see here that dollar had a deep retracement back into the range, from this range low to this range high. And so we traded into a weekly balance price range. Okay, we took out some liquidity here. And then since trading into this level, we have rejected, right? And I want you guys to pay attention to oil here. So oil, okay, we've seen price rally up into this fair value gap, right? Balance price range, order block. Okay, so you can see as dollar, look at the cursor on both sides here. As dollar is trading into that balance price range, it's also taking out a low, okay, where the X is. And so what this is called, it's called SMT divergence. Okay, so every quarter, every 3 months, right, we want to see SMT on the daily chart, or we want to be aware of a potential SMT divergence on the daily chart. And what this can indicate to us is a change in state of delivery. Okay, so we can clearly see here that dollar is taking out this swing low, coming into a higher time frame PD array, right? And at the same time, oil is coming up into this fair value gap, okay, order block, and then the balance price range over here, right? Note that we have the optimal advance William %R signatures. Okay, this is important because it gives us an element of time and price of when the banks are going to accumulate or distribute orders. Right? So if you guys have been watching my YouTube and have been following along, I am expecting potential big candles to the downside for oil. And we'll just scroll out here to the weekly chart so you guys can see the pool of liquidity that I'm referring to. Notice these equal lows in here. So we have a low, 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 right? There's tons of liquidity resting below the marketplace. Okay, we also have a fair value gap. Okay, so we could eventually target that, right? This is another draw on liquidity for the sell side. And so that is what I see going forward for oil and for dollar, right? And if we take a closer look at other asset classes, okay, we'll start with the indices markets, right? So NASDAQ, the Dow Jones, and the S&P. Right, we have SMT on the weekly charts. Okay, so we can clearly see here that we're failing to take out this high. See the cursor, right, on all charts, right? NASDAQ is failing to take out this high here, right? We've taken out the high here on the Dow Jones, and we've also taken out that respective high on snooze. Okay, so for me, I'm going to reasonably expect, right, because of our analysis on dollar and oil, okay, I'm expecting bearish prices. I'm expecting a high to form in here because of the SMT, as well as what we just went over on oil and dollar. So just dropping down into a daily chart very, very quick. I want us to note this balance price range in here. Okay. So here, right, if we close back below this balance price range, we're going to target this swing low. First this fair value gap and then this swing low. Right? Looking at the Dow Jones, okay, I personally think we're going to be targeting this liquidity on Thursday and Friday, either Thursday or Friday. And potentially even into next week. So we'll see what kind of sell-off that we get. Okay, and same thing with the S&P 500. We have this gap that we want to be aware of. Okay, if we close below this gap, trade back up to it, we want to be targeting the sell side, and then the remaining gaps over here. All right, going back up to a weekly, very, very quick. Okay, if we start to sell off, guys, we have tons of fair value gaps below the marketplace that I could see get targeted in terms of discount. Okay, lots of gaps for us to target. Okay, so we have quite a bit of room for us to move lower if the SMT holds, right? And if we trade below that balanced price range on NAS, I could definitely see price diving for this fair value gap, right? And the last thing we're going to look at, I actually mentioned this in my previous video on Bitcoin, on the Bitcoin ETF approval. We have very, very similar characteristics here, right? SMT divergence. Okay, on this swing high, Bitcoin takes it out. We fail to do so here on Ethereum. And so I see price rejecting this fair value gap in this balanced price range, right? To then move lower. I could potentially see this sell side liquidity as a target. And for Bitcoin, right, I could see this FEG in here become a target, right? So when we're looking at quarterly shifts and looking at markets from a macroeconomic standpoint, we want to start to bring in other pairs, assets, and that type of thing, right? And this is what we want to start doing every 3 to 6 months. Okay, so when we're looking at quarterly shifts, we want to take a look at every 3 months, 3 months, 6 months, 9 months, 12 months, and look for SMT divergence on the weekly time frame, the monthly time frame, or the daily time frame. Okay, and we can fractal this concept down to the weekly. Okay, whenever we're anticipating weekly candles to form, and we're trying to predict the weekly candle, what we want to do is drop down into that 4-hour time frame and look for SMT amongst a variety of asset classes, and that is going to give you the direction for the week. Okay, so SMT is very, very important. Okay, it's very, very important with the optimal advanced plan. All right, we need to focus on SMT, and if we see these types of divergences in the marketplace, okay, especially on a monthly time frame, weekly time frame, daily time frame, this is going to give us directional bias, right, for the next quarter or the next 6 months potentially. Okay, so you guys have to be aware of this concept. You have to study this concept, and we have to apply it. Okay, like I said, this is giving us the direction for the next potentially 3 to 6 months. Okay, so what are we going to be looking for on the micro time frames? We're going to be favoring shorts. All right, and so when we have SMT like this, last thing, guys, right, if I'm going to be wrong, okay, then this fair value gap right here, has to get closed above. So we have to close above this fair value gap, so it will become a balanced price range for us to be wrong. All right, so we want to see rejection from here and start to see price move lower. And like I said, guys, we have a lot of time. Okay, I potentially see this low getting taken out. I would say in September, October, or November time, kind of towards the election. All right, guys, with that being said, I hope this video helped you guys in terms of macroeconomic analysis. And if you guys have any more questions, please feel free to reach out at my Instagram. I will put it in the description of the video. And until next time, guys, God bless you and take care.